Okay, welcome everyone. My name is Sean Stevens with Metroplex Mortgage Services. I want to welcome you to today's manufactured housing online workshop. We get so many questions about manufactured homes. I thought it'd be good to jump on a quick workshop, give you really the 30,000 foot overview perspective of this. I mean, you could really get into the nooks and crannies, as you can imagine, on some of these. So we're going to get big picture on this, talk about some pain points that we see commonly and how you can, hopefully you can avoid those on your future transactions. Now, how many that's joined us or how many that's on this workshop, who has had substantial experience with manufactured homes? Maybe a little bit, maybe none at all. It'd be great to just get a quick yes or no on the chat board if you could throw it on there. And while we get started, here's a disclaimer for everyone to view as we move forward into the program. All right, a little bit of background about myself. So I entered the mortgage industry way back in 1998. So that would make me officially, I would say at this point, a mortgage dinosaur. And I started Metroplex Mortgage Services in 2001. We're licensed in Florida, Texas, Tennessee, and Alabama with our main office in Tampa, in branch offices in Sebring, Florida, and Dallas, Texas. We are heavily known for our government loan expertise. With that, we are a USDA and VA approved lender. We're not going to be digging into the credit aspect of it too much today, but we have expert credit knowledge in my office, which really helps turn the wheel on some of these government loans and the qualifications. Also, I'm a licensed California attorney and in-house counsel here for the company. I'm a certified mortgage banker, and you're going to see I really love what I do in the process. So, above all, we're going to just really help take you under the hood of the manufactured home loan process and help avoid some of those common pitfalls that we see. Okay, and then recently I want to share with you an announcement. USDA publishes lender rankings. And under the USDA program, we were issued the #1 lender ranking award once again this year. We'd earned it before, and we're really proud to earn this achievement again. And what this basically means is we closed the most USDA loans in the state of Florida, which gives us that #1 ranking. So we're really proud of that accomplishment, and we apply that USDA experience and expertise. We'll be talking about the USDA program as we get to the end of the program. And just a little bit of a quick agenda. We're going to be talking about some of the basics of manufactured homes, some of the commonalities you'll see between the programs. We're going to dive into conventional loans, give a little brief overview of that, some of the highlights, general qualifying requirements. We're going to talk about the FHA program, some of the nuances with those FHA criteria, also the VA loan. There are some myths that are out there about the VA program that we're going to dispel today, and also the USDA loan for both those new and, in a more limited manner, those existing manufactured homes. So let me check so we got some experience on the chat board, it looks like. I know, Joe, I know you've got tons of experience out there. So, I mean, whether it's a lot or a little, this is going to be great for everybody. So just the basics. So remember, the manufactured homes, when the standards change, has to be built on or after June 15th, 1976. Now, while you technically can go back to that date, you always want to be wary of insurance to make sure you have proper insurance coverage for the home lined up. It could be no parks or rented land. We're talking about real estate. The towing hitch, wheels, and axles must be removed. And as I mentioned, this has to be that real estate, land and home together. You need to be extra cautious with structural changes, alterations, or modifications that have been done to the home since that initial installation date. I mean, those could be porches, it could be carports, it could be additions. I've seen scenarios over the years where they've built entire new homes in and around the manufactured home itself. I've been inside those properties and seen some of the alterations that have been done. Where literally, many of you on this call may have come across this as well too, where you've built a single family residence around the home and it's now encompassing the entire original manufactured home structure. That can be a problem, okay? So we're going to talk about double wide and single wide, also known as double width and single width manufactured homes today. You might also hear the terminology triple wide. So, I mean, those are all just set up with the width of the homes, okay, whether it's a single, double, or triple wide. And it's got to be on that permanent chassis, and obviously being able to connect to required utilities. So some of just the basics. Now, a common question you hear is manufactured the same as modular, okay? So manufactured has those HUD code standards that we're going to follow. The modular home is going to be built to those site-built home standards, okay? So when an appraiser goes out there, they are going to be comparing a modular home to other single-family residences. So you got to be really careful. These words get thrown around. If you see manufactured or mobile home, those are going to be in the same definition. Modular is going to be separate. Okay, so don't interchange modular versus manufactured or mobile. You want to be clear when you're talking. So you say, well, if it's a modular home, that's a completely different qualifying standard as far as what's available for programs in some of the criteria. All right, I got a quick question on there talking about age. I wanted to address this real quick. So you mentioned 1976, but for financing, I've heard they have to be newer ones. Now, depending on USDA loans, require newer homes. We're going to talk about that's a really good question. But I mean, going back to, let's say, FHA, conventional VA, they technically will allow back to that June 15th on or after date, but you have to be, once again, very careful about insurance. And we're going to talk about that as we go through. And some lenders as well, too, they will maybe go back to 1990, 1985. They'll have their arbitrary dates that you must abide by if they're providing the loan. That's called a lender overlay. So it may be 1980, it may be 1990, it may be 2000. Okay, so just always you want to check with whoever's doing the financing, see if they abide by that standard as it's written, or if they have any overlays as far as what date it must be. Okay, it doesn't mean other lenders out there can't go back to that, but whoever's providing the financing, you want to make sure you're in line with what age restrictions they have for the property. So is there any other date or time questions before we move on to conventional loans? If you do have it, please throw it on the chat board as well. Okay, so when you hear the word conventional loan, remember, Fannie Mae and Freddie Mac are underneath that umbrella. So these are conventional loan guidelines which get applied. So I'm going to read this to you. I don't like really reading from these, but I mean, I think this is good to have a good basis point. So Fannie Mae's definition of manufactured home is any dwelling unit built on a permanent chassis that is attached to a permanent foundation system and evidenced by a HUD data plate or HUD certification labels for each section of the home is a manufactured home for purposes of Fannie Mae's guidelines. The manufactured home and the land on which it is situated must be legally classified as real property. Now, just based on that definition, some of the common themes between the programs, legally classified as real property. You're going to hear the HUD certification labels, the HUD data plate. We're going to talk about that as we go through the presentation. And I'm going to give you some visuals on the HUD data plate and the certificate as we get more towards the end. Now, Freddie Mac has a slightly different definition. A manufactured home is a one-unit dwelling built on a permanent chassis in accordance with the National Manufactured Construction and Safety Standards Act as promulgated by HUD and affixed to a permanent foundation. So you can see here, that's although different technically definitions, you see permanent foundation, permanent chassis. So, I mean, they fall in line with each other, okay? All right, now here are some of the general requirements. Generally speaking, you're looking at for a primary residence, you can qualify for as low as 5% down payment. Now, there are 3% down payments I have listed there. You see Fannie Mae has an MH Advantage and Freddie Mac has a Choice Homes. Those are very specific because the property types themselves, as you see there, must meet certain construction specifications and be similar to site-built homes, along with other restrictions applying for those unique 3% down options. So generally what we see in the marketplace, you're looking at 5% down as a minimum for a primary residence. Second homes will allow 10% down. Now jumping back to the, this is going to be for both single wides and double width. Second homes will are only for double wides. Okay, so second homes, you can go as low as 10% down. There are no investment properties under conventional financing. Minimum square feet is 400, at least 12 feet in width, which is typically the size of a traditional single wide. Structural engineer reports. Okay, I'm going to take a minute on this. Has anyone been through a structural engineer report lately? Has anyone heard that term? So this is something where the engineer, the inspector will go out there. This would, let's say, be separate than, let's say, the home inspector, the home inspection that's done. It could be the home inspector could also be a structural engineer inspector as well, too. And with the structural engineer report, okay, conventional loans. Now, remember, we're talking about conventional. We're going to talk about FHA next. So this is going to be different. This is where I see the big confusion between lenders and where their mistakes are made. So with the structural engineer reports, they're not per se required, but the appraiser is going to determine that. Now, it would be a red flag if a lender is ordering this from day one. So let's say you get your contract in, you send it to Mr. and Mrs. Lender over there, whether it's in-state, out-of-state, wherever it is, they're handling the manufactured home financing. And the next thing you hear from them is we're ordering an appraisal, we're ordering structural engineer report, and we're getting those ordered simultaneously. You don't necessarily need to have a structural engineer report. If there's alterations, modifications, other things that can trigger that type of report needed, that's a red flag you'd want to push back on at the outset and say, why do you need to order this right now until the appraisal's done? What concerns do you have that are triggering the requirement for this to be done at the outset? The reason being, if it's not needed and the buyer pays $400, $500, $600 for the structural engineer report, maybe more, you're trying to save them that cost and extra time in the process. Now, obviously, they're more than welcome to get their own independent structural engineer report. I'm just speaking from minimum property requirements and when something may or may not be required in regards to that structural engineer report, because that can be a time sensitive and it's costful. And speaking about the cost, one thing we always take time to educate our buyers on is the additional costs manufactured homes could have up front. Inspection cost, structural engineer reports, appraisal cost. So whatever those increased out-of-pocket expenses are, we're always educating our buyers that those can be more. This can be more than a traditional transaction because of the type of reports that may be required. So really a big ticket item on this slide right here I want you to focus on is structural engineer reports are not always they're not required out of the gate. If the lender is ordering that from day one without any further investigation or reason, if that's just, you may want to really question that, because that could be showing their inexperience in this market. Because what we're seeing right now is lenders, as the real estate market changes and rates have gone up, many of these lenders that were out there that were handling refinances, online lenders, whatever it may be, their volume has gone down. And they are stretching into our rural areas that we're in. And you see naturally that comes with manufactured homes. You see USDA loans. I mean, those are some of the biggest repeat offenders as far as the mistakes that are being made. So as these lenders stretch out in the areas and start working with manufactured homes, they've not worked with the program before in many cases. They're not aware of the terminology. They're not aware of recommended approach. They're not aware of some of the local requirements that may need to happen, or what order these need to go in as well too. So those are things you got to be really put your guardrails up when you get into those deals where the lender is not familiar or competent with the manufactured home qualifying process. And I'm going to show you a case study here a little bit later on. Okay, so any questions on conventional loans right now as far as how that applies to guidelines? We're going to be going into manufactured next, but just anything. It can be, we're seeing these, really a surge in manufactured home requests, financing requests for people that are moving here out of state, retirees, just other additional options that can present affordable home ownership. Okay. And there's some great financing available for manufactured housing, provided it's done in the right manner. Okay. So moving on to FHA, let's go through the FHA definition. This is from FHA HUD Handbook 4000.1. Manufactured housing refers to structures that are transportable in one or more sections. They are designed to be used as a dwelling when connected to the required utilities, which include the plumbing, heating, air conditioning, and electrical systems contained therein. Manufactured housing is designed and constructed to the federal manufactured home construction and safety standards as evidenced by an affixed HUD certification label. Manufactured housing may also be referred to as mobile housing, sectionals, multi-sectionals, double wide, triple wide, or single wide. So we get questions a lot, okay? And I want to put this definition in there because it shows you the universal terminology. So mobile is looked at the same as manufactured home. Single wide, triple wide, double wide. You see multi-sectional, okay? But as we talked about in the beginning, modular homes is a separate category of itself, okay? Yes, Kelly. Kelly asking you to refinance single or double based on lease property. Yes, depending on that leasehold, okay? And we got a section on refinances later in the section as well, too. Okay, so this is some of the guidelines and highlights under, now obviously the 4000.1 is, you're looking at hundreds and hundreds of pages. I am paring this down into very snippet sizes, so we're just going to digest a small portion of it to give you that big picture overview. So if you want to spend a Sunday reading through all hundreds and hundreds of pages, please let me know, and there's links online where you can go grab that easy reading. So to be eligible for FHA, it must be designed as a one-family dwelling. I'm at the first bullet point here. Have a floor area of not less than 400 square feet. Have the HUD certification label affixed or have obtained a letter of verification issued on behalf of HUD evidencing the house was constructed on or after June 15, 76. So there is the wording we had. I bolded that because that ties in with our very first slide. And obviously that's in compliance with the federal manufactured home construction and safety standards. You see that verbiage over and again. There's our be classified as real estate, be built and remain on a permanent chassis. We're going to talk about the foundation here in a moment as well too. Be designed to be used as a dwelling with a permanent foundation built in accordance with the Permanent Foundations Guide for Manufactured Housing. HUD has specific foundation requirements. And then it must have been transported from the manufacturer or the dealership to the site, i.e. not been moved and relocated from one site. The same with conventional, not moving it to ABC lot and then, okay, we're going to pick it up and move it to XYZ lot. Okay, that's a big thing you want to be on the lookout for because we see that come up time and time again. We're going to talk about that and show you a case study as we get towards the end of the presentation as well too. So remember, it has to be directly transported from the manufacturer or dealership to the site. Okay. Now, let's take off the conventional hat and put on our FHA hat. We're talking about structural engineer requirements. So I'll read this to you. The mortgagee must obtain a certification by an engineer or architect who is licensed or registered in the state where the manufactured home is located, attesting to compliance with the PFGMH. It also states the following regarding the additions or alterations. If the appraiser notes additions or alterations to the manufactured housing unit, the mortgagee must ensure the addition was addressed in the foundation certification. So if FHA requires this certification, it's not, it could be, it will be. Okay, this is going to happen. However, a recommended approach to doing this is waiting for the appraisal to come back. Let's make sure that is approvable. The value comes in good. We have a good solid appraisal that's eligible, it meets all the criteria, and that is approved prior to ordering the structural engineer. You don't have to do it this way, but it could prevent you from your client from incurring unnecessary costs in case something goes wrong at the appraisal stage. That way you can layer it in where you do appraisal, structural engineer report. You might have other inspections too going on at that same time. So the cost can go up quickly And if something happens to the transaction, buyer withdraws, whatever it may be, then they're out a substantial amount of money and you want them to be buying a home instead of sitting on the sideline. Now, depending on the structural engineer report, that may trigger what is called a retrofit. Before I go to the next slide, I want everybody to jump on the chat board. Has anyone heard the term of a retrofit before? Okay, yes or no? If you haven't, no worries, okay? But if you... So the question is, who on the webinar has heard the term retrofit before? Jim has done it. I like that. Joe, I know you were going to say yes on that. All right, so let's so when you say the word retrofit, I found just a general definition: an instance of modernizing or expanding with new or modified parts, devices, system, or equipment. So basically, we are upgrading that foundation. We're modernizing it. We're making it HUD compliant. Anchors, straps, skirting, whatever it may be. Those are what we're looking for. I mean, so when the structural engineer report comes back and provides their feedback, then that could trigger the need for a retrofit, where a third-party company comes in and they will upgrade the foundation so that it meets HUD compliance for that FHA financing. Now, I'll give you a little hint. We got to make sure when the USDA does happen on this, it's very similar almost to the T as far as what we need for our eligibility on that foundation requirements, okay? So we'll talk about that here once again a little bit down the road. So a retrofit would happen. So let's just walk back through the timeline. Contract is signed, loan application started, we get the appraisal ordered, appraisal comes back good, structural engineer comes back, and they report, say, we need these fixed. Then a retrofit would be ordered where the company comes out and makes the adjustments so that it will pass the engineer report. Now, remember, this isn't a free service. Somebody has to pay for this. So when we get to that stage, either A, the buyer or seller have to already be having this conversation. If this comes up, who's going to pay for it? And then is the retrofit company going to accept payment at time of closing? Is it going to be paid for in advance? Now, depending on the scope of it, that's going to determine the variety, the range as far as what the cost is going to be. Okay. So this is something, once again, one of those additional potential costs. It's not a guarantee there is going to be a cost, but there could very well be one depending on the foundation and how it was constructed. Okay. So just be aware when you're going with FHA, this could very well be the chain of events in the various cost structures that go into this, in the expenses that have to be outlaid by the buyer and sometimes the seller, depending on what they agree upon. Okay. And if anyone has any issues with connectivity, there's a reconnect button in the top. And that'll help out too as far as everyone's connection. Okay. Now, as we go on to VA, how many in the class? I know we got a pretty wide variety of different experience levels with manufactured homes. How many have worked with VA in either single wide or double wides? You say yes or no. Yes, you work with VA manufactured homes. And Joe put a great comment on there, 1990 before, every time, unless already updated, costing. Yeah, I believe we have some Texas agents too. So it's completely, so it's going to be depending on your area as well too, what you need for that retrofit as well too. That can vary as well. So thanks for that feedback, Joe. Okay, so we have some yes and some no with VA manufactured homes. I tell you what, VA, in my experience, offers some of the most flexibility with manufactured homes compared to other programs. You get right out of the bat, no down payment. Obviously, conventional, we talked about 5% down, generally speaking. FHA is 3.5% down. VA, obviously conventional, you're going to have mortgage insurance. FHA, you're going to have mortgage insurance. VA, no mortgage insurance. So you could have that pure 100% financing with VA on either single wides or double wides. So here's a snippet from the VA handbook. So as you can see up there, manufactured home must be classified as real estate. So this refers we're not able to finance those lot rentals, park rentals. Must be considered a real estate entity in accordance with state law. Manufactured home must be on a permanent foundation. So VA has a permanency. They don't have the stringent HUD code that you have to follow. VA has a general approach. Obviously, the appraiser is going to go out there, and if the appraiser notes that it meets VA minimum property requirements, then that establishes that. However, if the VA appraiser then says something would need to be addressed on the home itself or on the foundation, then that would need to be. So this is another program where a structural engineer report is not required from the outset. I am starting to see more and more some of the common myths that you can see on there. The home has to meet those HUD standards for built by HUD manufactured home construction and safety standards. As you can see, that same verbiage and same theme goes from program to program. Now let's go through some of the highlights and we'll talk about that. So 100% financing. VA will allow manufactured homes that have been previously moved. We've worked on these in the past, and this is that one instant where, let's say it was delivered to ABC lot and installed there, and then later moved over to XYZ lot. We can finance that with VA. VA will permit that. Both single wides and double wides are permitted. There is a huge myth out there by lenders, possibly because they don't offer the financing through one of their overlays, they will not offer single wides. And they will try, I've seen this time and time again, instead of giving the veteran these options, they try to push them into higher priced homes, which is completely anyway, giving the veteran the full array of options of homes and letting them choose is the way, obviously, what VA allows for that flexibility. So both single wides and double wides. In the question, Yvonne said, is that per lender though? Is that, I mean, as far as if the manufactured homes have been previously moved, Yvonne, or is that about single wides or double wides? If you could clarify, I'll get that answered right away. So, but both single wides and double wides, VA permits that. So VA actually goes into their handbook. It even says further, a single wide has to be at least 400 square feet. Double wide needs to be 700 square feet. So Yvonne, that may be VA permits it. So Yvonne had asked, is it per lender about moving the homes? Some lenders will say it's just not permitted. VA doesn't restrict that. So if your lender says that it's all on the lender decision at that point, VA does not restrict that transaction. Okay, so we've worked with it in the past. So I know just from experience, VA permits that and from the handbook. But I also know lenders, the biggest myths I hear is VA won't allow them moving a home and VA won't finance single wides. It's not VA, it's the lender making that decision. So if they need to find another lender, get a second opinion, we're receiving those day in and day out on these type of scenarios. So Blanca asks, so glad I'm here because never accept the move ones. Yes. So remember, that is an issue though. Moving them is an issue with USDA, conventional or FHA. VA is the exception to that general rule. So great questions, everyone. Is there any, I'm going to continue on with VA, some of the minimum property requirements. Is there any other questions at this point on structure or? All right, we'll continue on. Anybody I miss, I'll get here. We'll get later on. So VA has established, so here is the minimum property requirements. I want to read through some of these to you. Now, this is a snippet of it. This is just an overview and not an exhaustive list. So when you see the words MPRs, it stands for minimum property requirements. So VA established minimum property requirements to protect the interests of veterans, lenders, and servicers. Properties must meet these requirements prior to guarantee by VA. So key words, if you look on that second bullet point, what VA is looking for is safety, structural, and sanitary. So I get so many questions that, Sean, is this going to be a problem? Is this going to be a problem? I mean, if it affects those three items, it could be. It doesn't mean the VA appraiser rejects the appraiser. It could just be where they need to be addressed as we go through the process. Either they can get it paid at closing, fix things during the process, whatever it may be, and have the appraiser go back out there to provide a clearance appraisal report. Now, VA also specifically writes, if you look on that next bullet point there, that the appraiser is not a home inspection. So they have to note those readily apparent repairs that are needed. It says there in the second line that fee appraiser will not perform operational checks of mechanical systems or appliances. In my experience, VA gets a bad rap in many cases. They say, well, the appraiser is going to be too stringent. I find VA to be a very reasonable approach. I find VA to have a high amount of flexibility, and it really is a tool that you need to have in your toolbox, whether dealing with single-family homes, manufactured, modular, single-wide manufactured, double-wide, whatever it may be. Having VA in your toolbox and not being aware of it and not being scared of it is critical. Under cosmetic items, appraiser should not recommend repairs of cosmetic items involving minor deferred maintenance or normal wear and tear, or items that are inconsequential. So once again, I'm pulling these out because I want everyone to see VA does take a reasonable approach to it. And under detached improvements, sheds or other improvements may be including the value if the improvement meets VA property requirements. But if the improvement presents a health or safety hazard, the appraiser must be completed subject to those removal of the improvement. So once again, VA takes a very, very reasonable approach. And I'm glad to hear Blanca loves VAs because it provides us with so much financing flexibility with expanded debt to income ratios, flexible credit qualifying, low down payment. I mean, it really is a weapon to have in your arsenal. Another nice feature on VA, which happens quite a bit in our rural areas that we serve, is being able to include multiple parcels within the same contract, within the same loan. So you can see there I got the excerpts on the side. More than one parcel or lot may be included as long as the property is contiguous, attached together, and legally marketable. So VA does not set a limit on the number of acres that the property may have. So as long as it's connected. And so in this example, we had two lots on either side of our subject property, and which include, in this case, single family residence that could easily be a manufactured home. And that's something that we would be included with one deed, one survey, one deed at time of closing, and one property. So this comes up more often than you think in the rural areas that we serve. So on the same tax bill, I mean, at some point, at time of closing, we've seen it not necessarily be on the same tax bill at that point, but then going forward, it's going to be classified as real property more than likely. And obviously check with the county, check with the title as far as what those individual circumstances may be, Yvonne. Okay, so we're going to spend a little bit of time on USDA because we have some intricate parts of this. Some of it applies to Florida, some of it does not. So for example, our licensed states that I mentioned at the beginning was Florida, Texas, Tennessee, and Alabama. We're going to talk about the pilot program, which is for existing manufactured homes. That is geographically limited to certain states, but that could be changing for all states. Okay, I'm going to give you an update on that when we get to that part of the program as well. Okay, under the USDA single close new construction loan, this permits a new construction manufactured home from an approved dealer to be delivered to the buyer with no down payment. It's an amazing program. We worked with it for years. You can work with both single wides and double wides. It has to be from the dealer to the consumer. It has to be that brand new unit. The closing occurs prior to construction, and then draws can be given for the home to be set and delivered thereafter. Great program, a great feature, not something you're going to use day in and day out, but once again, another tool to have in your toolbox. So you can incorporate the land cost with it. So let's say they're buying land from a third party, they're buying it from an approved dealer, then we would have all that come together at time of closing at that one upfront closing. So minimum square feet of 400, which you've seen that similar with other programs as well too. USDA does not differentiate between single wides or double wides. They just have that square footage requirement. Now with the USDA program, there's also income and property eligibility requirements. And obviously, depending on your area, check the USDA eligibility map to be sure you are in one of those areas, which we can walk through a couple of those scenarios in a moment. Okay, continued. As you see in that first bullet point, it must be a new unit that's never been installed or occupied at any other site or location. Manufactured units may be moved only from the manufacturer dealer's lot to the site in which the unit will be financed. Then that must have that manufacture date within 12 months of the purchase contract. And it must be placed on a permanent foundation built to FHA guidelines. Remember before we had the permanent foundation guidelines? We're going right back to that too here for USDA. They're going to follow that same foundation requirements that FHA does on this. Here are current income limits. I know we have some out of state on this call as well too, but for example purposes, for the current income limits in Florida, which were released back in July, USDA goes by household income. So based on how many people are living in the household, all that income has to fit within the limits, whether they're on the loan or not on the loan. I've got a separate USDA course where we jump into all these details, but this is really big picture at the moment. So on a 1 to 4 person household, for the majority of Florida counties, you're looking at $110,650, which means that all the income in the household together has to stay at or below that. So let's say you had husband and wife and 3 children. Now we're in a 5 person household. That jumps up to $146,050. So on a 5 to 8 person household, 146, very healthy income limits across the board here. Very healthy. So who on this call is familiar with the USDA program, whether manufactured or single family? If you're not, you really need to be, because it's one of those weapons that home buyers right now, with the inflation concerns, with the affordability concerns, there's a high demand for home ownership in wanting to buy a home right now. That's not dissipated. What has been is the concern for the affordability, the out-of-pocket. So with USDA, VA, I mean, those two are really neck and neck with the value they provide, especially to our rural areas. Well, Jackie, we're going to have to change that here pretty soon, because this is one of those programs where buyers are really seeking, and you as a realtor need to be, once again, I'll use the phrase, be aware and don't be scared. And for anybody that want to set up separate training after this, just send me a message, send me an email. I'll have you got my contact information, and then we'll set up some separate training on any of these topics we talked about today. So for example, the USDA eligibility site, I know we have some agents from Okeechobee on the call. This is our main office is in Tampa, but this is our office in Sebring. As you can see, that's the located eligible area, as all is the majority of Central Florida. Now, if anyone wants me to check an address, I would be more than happy to walk you through the eligibility site, and I can show you that if you'd like to. If you have a listing or going to see a property or whatnot, just throw the address on the chat board and we can jump over that as we get to the end. Now, let's talk about the pilot program. So the pilot program was introduced years ago for a select number of states. And it is a geographically limited program. For example, Tennessee and Texas are eligible states, with the states that we're licensed in. Alabama and Florida are not. Now, I'm going to pull up Blanca's address while I'm talking about this. So what some of the USDA started a rulemaking process, which it is begun the initial stages of attempting to open this pilot program up to all states. I mean, this could happen as early as the beginning of next year. And if it does, it would more or less follow the same flow. Okay. So let's go through this and I'll get to the property search and I'll jump into that property search here next. So introducing the pilot program. So as I mentioned, geographically limited. What the pilot program allows is for USDA to come in and finance no down payment on existing manufactured homes. And this is good for everyone on the call because this could very soon be expanding to all states and not just those specific geographically limited ones. So now USDA's criteria on this is it must be built on or constructed on or after January 1st, 2006. Okay, so that's a timestamp. I know we talked about this earlier. That's time specific for this program. Okay. And if you can see here as well on the next bullet point, the unit must not have had any structural alterations since construction of the factory, except for porches, decks, or other structures. We talked about that before with the alterations, modifications, to be very cautious with that. An inspection is required using HUD 309 or certificate. I mean, this is basically bringing in that structural engineer aspect as well too. And you must not have been previously installed elsewhere. It's got to be on that original location. And there's our minimum 400 square feet again. And then the towing hitch, running gear must be removed, must be classified as that real property. And obviously we got to meet all other USDA criteria. So remember, this is for those existing manufactured homes. The single close new construction was for all states. Okay, so the new construction is not state limited. It is just for those existing states. All right, so now when we're talking about USDA or VA, okay, whether it's manufactured homes, single family, whatever it may be, it's important to have terminology. Just like we talked about manufactured versus modular, it's important to have the terminology. What is really no down payment? And this keeps in theme with that whole affordability aspect. Consumers are seeking to minimize that out of pocket. So one thing you want to tell buyers is no down payment is not the same as no money out of pocket. You need to prepare for those minimum expenses, earnest money deposits, appraisal fees, inspection fees, manufactured homes. You could have structural engineer reports. You could have retrofit expenses too, depending on how that report turns out. Remember that the borrower, unless otherwise negotiated with the contract, the buyer's responsible for their charges at closing. No down payment doesn't just wipe that away. We still have these calls where the buyer, they confuse no down payment with no money out of pocket whatsoever. Now, we are seeing more of a trend where, let's say 12 to 18 months ago, it was highly difficult, if ever, where we're seeing a trend for seller concessions to start to come back into some of these contracts as part of the negotiation. So let me get your kind of, what is your take on the trends with seller concessions? If everybody could just throw some comments on there, I would love to hear as far as, do you see them increasing? Do you see them still difficult to get? Do you see them more and more coming as part of the market, or none at all? There are some properties, there are some markets where concessions are really still off the table. And some we're seeing creep back in as part of that negotiation process. Now, but one thing we tell buyers is exactly what I'm talking about right now is it could be possible. Don't count on it. What do we have as a backup? Now, USDA loans will permit the ability to finance closing costs, which we'll talk about in a minute here. We're going to get to that slide. I got a side-by-side slide which shows the different features between the programs. So here, I want to just put a little did you know. Here is a case study that we put together on a recent call that we took. We did not take the application. We just received the scenario after the loan had been denied by the lender. So here are the facts. Home buyer went under contract to purchase a manufactured home in Florida with a nationwide FHA lender who they were pre-approved with. They started a process in August and have since paid for all inspections, structural engineer report, appraisal, flood insurance, and deposited $10,000 escrow with the title company. It is now November. We just learned their loan was not denied the day before closing. So as you see, property details, the manufactured home was on stilts, and the manufactured home had been previously moved and relocated from another location. So you can see there we have alterations, modification with the home being placed on stilts after it got moved. Now, I'm not saying stilts is, it's not possible for a manufactured home to be on stilts, but everything goes together on this. The manufactured home had been moved from a prior location to the current one and then also put on stilts. And then what you can do if you're unsure if it's been moved, okay, I put instructions down there right here. So FHA is not allowed the manufacturer to be moved. If unsure, go to the IBTS website you can request a verification from there. And you always want to look out for modifications, alterations, carports, porches. The porches that have been enclosed and attached, sometimes unenclosed and attached, built onto the structure itself. Always be on the lookout for anything that pops out as possible that might trigger the need for a structural engineer report, maybe evidence, maybe the home had been moved. Maybe always you want to ask those questions at the outset, especially in today's day and age with some of these lenders coming in that aren't familiar with these type of questions from the beginning and just assume everything is status quo when they move into it. So really discouraging to hear these. And we love to be that sounding board for second opinions. And we love to be able to provide all the resources that we do. Some of these are just, they should have been avoided at the outset by simple due diligence from the lender. So I guess a great case study of what not to do from the lender side and what to look out for from your side for some of the questions for you to ask. Yep, Blanca, that happened today. Moved from Georgia to Florida. Yes, that's something you really, it's not uncommon. It is in the marketplace. So here are some of the questions we get as well, too. I just want to put some visuals out there so you would get an idea of, if you're not familiar with this, I know we have a lot of the seasoned manufactured home realtors on the call, but this is going to be just a good review for you as well. All right, so you have the HUD data plate. So usually I put a description of that white piece of paper, usually found on the backside of a kitchen cabinet door. Okay, so HUD does not, and I got bullet points there. The second one there, you see the data plate shows a map of the U.S. to let the consumer know the wind zone and snow load for which their home was built. And once again, there's that IBTS site again. You can request those letters of label verification from them as well, too. And then you see the HUD tag on this image here. Is everyone familiar with? I know I know a lot of you on this call have the war stories of going through, finding the tags, the data, going through to find the data plates. Maybe a home's been renovated. Maybe there is, for example, the data plate was gone because they tore out and redid the kitchen. Okay, that could very well be as well too. I found them in the laundry room. Yeah, so just everybody's got kind of their own stories on this topic. Painted over, yes, Ivan. Yeah, that's exactly right. We were just actually talking about that in the office the other day. So all right, so now we're talking about the HUD tag. okay? That 2x4 piece of metal riveted on the backside of a manufactured home, which Yvonne rightly said can easily be painted over in many cases. And that's how I found out that mine was Georgia and for the label. Yeah, like that's a great point. So here's the details on these labels, approximately 2 inches by 4 inches inside, 4 blind rivets, drive screws. The label shall be etched or stamped with a 3-letter designation. Each label shall be marked with a 6-digit number. The label shall be stamped with numbers sequentially, HUD 4000.1. And there's your Institute for Building Technology and Safety, okay? So really HUD tag, data plates, common terminology with, once again, this is what we're seeing from the lender. So if you have your checklist of items, if you want to have your kind of red flags to look out for, you want to make sure if they're not familiar with if they've never heard of a data plate or a HUD tag, that's going to be a problem. I would definitely, red flags, it should be like alarm bells should be going off in your head. If they're ordering structural engineers from day one, you've got to have the alarm bells going off, say, well, let's pump the brakes. Let's find out why we're doing this. Maybe you're not familiar with this market, and then you can help them and maybe coach them if they're not willing to change lenders. So part of this is not only just for using us as a resource, but also to help you navigate some of these transactions when you get to a point where it seems like you're past a point of no return. And quickly, we'll go through refinance options. So now once you're in the home, you've closed. VA, we can do rate reduction refinances. FHA loans, we can do refinances as well too. USDA loans. So let's say you've either purchased an existing pilot program under USDA, or you've purchased a new one, and then we've come back in. And so even in those states where, let's say Florida, where we do a new construction manufactured home, because we have an existing USDA loan on it, we can come back and do a refinance on that under the USDA program. USDA and VA both offer those streamlined refinances without the need of an appraisal. So really a great feature we have so many buyers wanting to get into home ownership right now and then just improve the rate later on and not miss out on that appreciation, because as soon as rates go back down, they want to be secure and stable in their home, while so many others could be flooding the market. Then Fannie Mae as well too. We have refinances, cash out refinances. So we have options under all programs. And here's that slide I mentioned before with the side-by-side comparison, USDA, VA, FHA, conventional. And I want to put this side, when I go to different brokerage offices, take a look at, this is the common flyer that I would see out, because it gives you so much meat and potatoes on one slide. And these are the type of the guidelines that don't change relatively on a weekly or even monthly basis sometimes. These are the standards that are just the basics, the bread and butter basics, I guess you could say. So with USDA, VA, obviously no down payment, conventional 3.5% down, conventional FHA 3.5% down. Conventional will permit 3% for primary, second home 10%. Obviously, for our topic today, manufactured home investment properties aren't eligible, but that's for the traditional single family type property, the 1-unit property. And then we talked about the VA program. Look at this flexibility. We're working with a VA exception right now, and buyer have come to us trying to get an exception. Exceptions can be available for USDA, VA, FHA. You can get exceptions on those. I would say your biggest exceptions are going to be opportunities would be with USDA and VA to these waiting periods. So when I say waiting period, it's how long after a bankruptcy, a short sale, a foreclosure do you have to wait to requalify? We can get reduced time from these as part of an exception process, depending on the merits, depending on the facts of their case. So what we do is really take an open approach to it from the beginning, is take a look at, apply that credit expertise I talked about at the beginning, and whatever property it may be as part of their eligibility, credit, income, and then based on what they want to buy, once we have the mortgage ready, then really apply it to whatever they want to purchase: single family, modular, manufactured, double wide, single wide, whatnot. And then here's our summary for the seller concessions. Okay, I know it's not prevalent in all markets, but for those where it is, okay, so USDA will permit up to 6% of the sales price towards closing cost. FHA the same. VA has a split with how they look at this. VA will allow 4% towards certain charges, which are prepaid items, but within that 4%, VA also permits a seller to actually pay off a veteran's debt. So yes, a seller could actually pay off a car balance, a credit card, a collection account at time of closing to help the veteran qualify. There is no limit on actual closing costs outside of that. So VA offers the most flexibility of any program in this regard, once again, aimed to helping that veteran achieve home ownership. Now, conventional loans, they have a three-way split. We have less than 10% down payment is capped at 3% of the sales price. 10% or greater is 6%. And if there's an investment property, that is capped at 2% of the sales price. So that's your seller concession summary. And then quickly here, myth versus fact of the USDA. So as we get to the end of each fiscal year, sometimes you might hear the USDA is out of money. So that goes through an appropriations period. If you hear that, we continue to fund loans during that time. USDA loans do not allow in-ground pool. That was changed almost a decade ago. And so there's no restrictions on homes with in-ground pools versus without. USDA does not only do farm loans, and we offer a wide variety of single-family housing features, as we talked about today, focused on the manufactured housing component. And we do have products that we can actually finance in repairs to our USDA loan, okay? And they're not only small loan amounts, they cater to a wide variety of first-time home buyers, as do all these programs. And I'll make sure as we wrap up here, I'm going to make sure everyone gets some links to our educational videos that go out, as far as with, they're already pre-made, so you can share those with your home buyers. It helps deliver just a nice tidbit to them on a weekly basis to help keep them in the loop and connected to the process. And if you have any buyers you want to recommend to the Metroplex team here, we would appreciate each and every one of them. The best way I've found is just get permission from them for us to contact them directly, and then call, text, or email with their information. Then we have the team, we have the bandwidth in the office where we can start to follow up and connect with them and help them down that home ownership journey and getting that mortgage ready process under their belt. Or if they just simply want to lay back and they will contact us, let us know who will be calling. We'll be on the lookout for their calls. So we can give them that red carpet treatment and move them to the front of the line. So with that being said, is there any additional questions before I let you go? That hour, from my standpoint at least, flew by extremely quick. I hope today's presentation and workshop that was focused on manufactured homes helps alleviate some concerns you may have in the market, and I really wanted you to see it from the lender's perspective of how this can be really a viable financing option if it's done properly. So I want to thank you all so much. I know so many of you on here have seen the other education courses, workshops, whatever it may be. Thank you so much for taking the time today. Anything you need, we're here. Just call, text, or email. We look forward to talking to you soon. Have a great rest of the day, everyone.